So before we get into this video, I wanted to just emphasize how big potentially Coinbase Custody, this Coinbase blog post, everything that came out today. I made a video about it, but I just wanted to emphasize how huge this could be. So besides the fact that they did say that they would keep us updated, give us regular updates on new assets being added, besides the four, Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. So besides that huge news already, and besides the fact they want to increase security and make it safer for everyone, the really big thing, you know, it says their mission is to make digital currency investment accessible to every eligible financial institution and hedge fund in the world. And if you think about it, that's really how the money is going to come into the market. That's really the way that this market cap is going to increase. Hundreds of thousands and millions of people, individuals who aren't part of institutions, adding into the market do affect the market. It will increase the price, but not nearly as much as institutions and hedge funds, and the big money coming into cryptocurrency will affect the market. So the fact that Coinbase Custody is aiming to help that process is just huge, and it really could spell great things for the future of cryptocurrency. I think Coinbase stepping up to do this is a great example of an exchange that should be, considering Coinbase is one of the biggest exchanges in the US, and most people, the easiest route, especially at the end of 2017 when people wanted to get into cryptocurrency, most people used Coinbase. It's the easiest on-ramp for a lot of people, or at least it was, and I still think it will continue to be for some time. Most people that I talked to during that huge run-up, most people were involved in Coinbase. I actually started on Kraken. It was my first exchange, and I also then opened up a Bittrex and a Binance account. But Coinbase I eventually did end up getting into because I kept hearing it tossed around, and so many people were using Coinbase to exchange cryptocurrency. And when I did get onto it, you know, it was a much easier, simplified way. You know, it's not as intimidating. Just seeing all those charts and everything and all the numbers moving around that end up becoming very useful after you spend a little bit of time in cryptocurrency. But Coinbase definitely is maybe so far the most user-friendly, especially for a large demographic of people who are not familiar with cryptocurrency. And so again, I also just wanted to talk about something that Dan at Crypto Capital Venture talked about yesterday. I'll leave a link to his video, and it was really eye-opening to me in terms of kind of the perspective of this bear market. And also, he did point out that it was written by Joseph Young, who is an author I really, really do respect, and I think he has really great information. Always love reading any of his work, no matter what it is. Definitely kind of an example of a cryptocurrency journalist that deserves to stick around. So why I thought this was cool is because I know the technology, the adoption of cryptocurrencies has accelerated, and usually when big game-changing things like that in the past, whether it's related to the internet or not, usually when huge game-changing things get introduced to the world, they can have exponential run-ups, and it happens very fast. So I was just thinking that the correction of 2013, or the bear market of 2013 to 15 was, you know, it was almost 2 years. And it was pretty rough, and a lot of people, and I've been saying this for some time now, you know, a lot of people are comparing our bear market now to the same one in 2013 to 2015. This chart here and what Dan talked about yesterday kind of put it into perspective on a way that, or kind of technical evidence that potentially we are seeing accelerated versions of corrections or bear markets. So really, if you take a look here, you can see that this bear market that we've been in for the past 6 months is very identical to the 2013 and 2015 one, except for the fact that it looks as if it progressed twice as fast as the 2013 to 2015 one. So you can see here the initial dip here took about half as long as the first initial dip at the end of 2013, beginning of 2014. And then the reaction here took about half as long as the reaction back then. It kind of just repeats itself in that way. So potentially what we're seeing here, essentially of the 2018 bear market, is identical to the end of the 2015 bear market, or at least somewhat close, maybe here in this range. So again, we could be in a bear market for 5 to 10 years. I mean, nobody knows, but we also could be coming to the end of the potential bear market, especially considering everything that is going on in the space. It is growing so fast. And I think if there are people trying to hold the price down or suppress it, I don't think that they would be able to for 2 years, like similar to what happened in 2013, 14, and 15. Again, one of the reasons that happened back then is because of Mt. Gox, the huge hack there, all of the money that was lost, which accounted for a very substantial volume and amount of the Bitcoin at the time. And the space has grown so much larger since then. So if exponential growth and everything really is correct, then it's very possible that we do see accelerated versions of corrections, accelerated run-ups like we did see at the end of 2017. That was insane, seeing it jump all the way up to $20,000 Bitcoin's price. So I just wanted to end the video then with this really good post on the cryptocurrency subreddit. Are we underestimating the crypto market's potential? Very well written, a lot of good points in here. It really gives a good idea of the same sentiment that I have towards this, and I think it's something that will benefit people watching the video. So it was written by SCPCMG, who's the original author. It was posted 4 hours ago. So he says, sometimes the big bull run of December, January feels like an unrealistic peak that we may struggle to see again. After all, relative to prices only 10 to 12 months prior to that, where you could pick up a Bitcoin for less than $1,000 US, the gains seemed astronomical. It finally seemed as though crypto had entered the mainstream as the global market cap peaked at around 130 billion US, and of course such highs seem so far away. But then it got me thinking of the broader picture that the huge high in crypto, the feeling of the world FOMOing in, only created a global crypto market cap around the same value as one company, Amazon, with a market cap of 824 billion at the time of writing. And I just want to add that I don't believe that what we saw in 2017 was really even a fraction of what the actual institutional and global capital could really bring into the space. And now the total market cap value of Bitcoin, around 110 billion, is worth less than one man, the owner of Amazon, Jeff Bezos. To put it another way, even at its peak, all of crypto was worth around 3.5% of the S&P 500, which in and of itself is a very small percentage of the global company stock asset class. It made me realize just how much of a drop in the ocean cryptocurrency has always been, even at its peak at the end of 2017, particularly for a brand new asset class. We've been a part of something that appeared to be taking over the world with its hype, yet it barely scratched the surface of the global economy. It's been without regulation, without proper custodianship, and without an asset-backed ETF. Banks have been cautious about it, and a huge amount of high-value trades have remained over the counter. Even now, the amount of people on Earth who own crypto is very small, not to mention the lack of serious investment from major institutions, fund managers, and so on. When you take a step back and look, you realize just how infantile the crypto asset class has been in pretty much every single way. The actual amount of fiat that has entered the market in the grand scheme of things is laughably small. Yes, the total crypto market cap volume touched the daily volume of the New York Stock Exchange a few times, but we're comparing volume that was overwhelmingly crypto to crypto over 24 hours to the pure fiat volume of 6.5 hours on one of dozens of stock exchanges worldwide. And that was only at the very peak. Meanwhile, Forex daily volume amounts to the trillions. I used to laugh at people who post that Wall Street cheat sheet bubble chart and point an arrow to the hope bump prior to the bubble to claim that this is what the December-January crypto bubble was, but I'm starting to wonder if they were right. There's still so much holding cryptocurrency back as a valid asset class, and I don't even think we're close to yet having the foundations in place for it to be taken seriously. This isn't intended to be hopium. Cryptocurrency might die off or reach all-time highs like we've never seen before. I don't know. All I do know is that in every aspect, from regulations to institutional frameworks to financial instruments to adoption to fiat volume, the progress in these areas relative to more established asset classes is less than 1%. Let's get to the basics, and then we'll see what cryptocurrency can do.